Bloomberg Audio Studios. Podcasts, radio, news.
The ARK Invest CEO, Cathie Wood, one of Tesla's biggest bulls, the EV maker, the top holding in her flagship ARK Innovation ETF, has this to say: "I do not understand why investors are voting against Elon's pay package when they and their clients would benefit enormously if he and his incredible team meet such high goals." Cathie joins us now for more. Cathie, thanks for making some time for us this morning. Good morning to you all. Do you think, Cathie, the incentives are well aligned?
Yes, we do. I do not believe any company anywhere near this size has ever delivered a compound annual rate of growth for EBITDA, which is a bottom line number, of 41% over 10 years. No company has done that. So, yes, indeed, the incentives are aligned. If he and his team are able to deliver on that number, the stock is going to outperform enormously.
Cathie, if by chance this proposal is rejected, would you consider shedding some of your Tesla position?
So I'm happy that the prediction markets are at 90 to 95% in terms of this is going through. So we don't have to think about that. Clearly, if Elon left, we think about it in two ways. One, we think robo-taxis, he has them at the starting gate as of June, and now they're rolling out, and that AI project is well underway. If he had left 5 years ago, 3 years ago, it probably wouldn't be anywhere near where it is. What we now think, though, is in order to capitalize on humanoid robots, which that's a much more difficult project, that, yes, Elon's brilliance and the team he has attracted around him are going to be necessary to pull that off. Our price target, $2,600 in 2030, is 90% of that valuation is robotaxi. We have very little for humanoid robots. If humanoid robots evolve as quickly as Elon thinks, now remember that's Elon time, but he already has a running start because robotaxis are robots. They're electric, they're powered by AI. Those are the three innovation platforms that will power humanoid robots as well. So he's ahead of the game on that one as well. But I do believe he's the right leader to bring that part of the story to life as well.
Cathie, I've got to ask you this, though, to follow up on Lisa's question. If you wouldn't sell, if he wasn't CEO, then why should we pay him that much to be the CEO?
What I'm saying is we would feel comfortable with the robotaxi part of the model, but we would not be able to build with confidence the humanoid robot part of the model. So over time, of course, as the story would depend more and more on that leg of the story, we would be taking our position down.
You talked earlier, Cathie, the past couple of days about this reality check that's going on in the tech sector. And I understand that Tesla is sort of in its own place and that you do hold them for the long term. How do you understand the reality check that's currently going on within a lot of the biggest tech stocks and this sense of skepticism about whether they can keep growing at that rate versus the long-term bullish bet?
You know, I'm really happy that there is so much skepticism out there. Anyone who went through the late 90s will remember there was no skepticism. And we had valuations based on the number of eyeballs on a website maybe 10 years from then. We're not seeing that right now. We are seeing, wait a minute, they're spending a lot of money on these data centers. This is a little bit of a different story than I was investing in, certainly in terms of, when I say the average investor was investing in with the Mag 6. Those were just cash cows and had huge cash positions. Something's changing here. It's making the typical investor a little more, I'll say, skeptical. This is not just the cash register ringing anymore. This is, a big bet on the future. So I'm happy there's skepticism. I think it's a good thing.
Are you buying right now? Are you seeing the skepticism as a chance to build some of your portfolio?
Oh, sure. And probably the most undervalued part of our portfolios is in life sciences, healthcare, because we think that is going to present the most profound application of AI out there. And yet it is highly underappreciated because, healthcare analysts aren't comfortable with tech and tech analysts aren't comfortable with healthcare. And, we've got a very siloed ecosystem in terms of the way research is done. At ARC, we're very focused on the technologies first and how they're going to scale across sectors. So our analysts are organized by technology. And we think there's a huge inefficiency there.
Cathie, thanks for being so generous with your time this morning. We appreciate it. Cathie Wood there, the ARK Invest CEO, on Elon Musk of Tesla and a whole lot more.